Hello viewers, welcome to my channel. I am Hasham Ali Khan. Last few videos I have completed the theoretical part of working capital. So one video I have prepared for explaining the meaning of the term working capital, how to determine the working capital, what are the importance, what are the factors. One video I have completed on cash management, then receivables management, then 3 videos on inventory management. So the problems on all these topics, that is working capital, cash management, receivables management and inventory management, the problems I am going to start from now. From this video, I am going to start the problems on working capital management. So if you are really interested in gaining a good command on this topic, watch all the videos from beginning till end. Don't join in between and don't skip in between. Then only you can be able to get a complete command on this topic of working capital. So before starting the problems on working capital, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the first 2 problems, then I'll explain the complete detail of these 2 problems. Now, see the first problem. Pravik Limited provides you information in respect of its sales and working capital for last 3 years. So for last 3 years, we are provided the sales as well as working capital. You are required to estimate the working capital requirement for the current year, given that sales forecast for the current year is 1 crore. So we are required to estimate the working capital. There are different methods of calculating the working capital requirement. One of the method is making a relationship between working capital and sales. The first method. So last few years data we will have regarding the working capital, regarding the sales, and we calculate what is the percentage of working capital on sales. The formula is working capital divided by sales into 100. We'll get a certain percentage. And that percentage we apply in the current year to find out the working capital requirement. Right? Now, we are given 3 years data. So we calculate the average of the last 3 years. The particulars 2018, 2019, 2020. So 3 years data is given. Net sales 50 lakh, 60 lakh, 80 lakh. Now see here, in all these figures, we remove last 3 years to make the calculation simple. Because we are calculating the percentages, so there is no need to take all these zeros. Instead of 50 lakh, remove last 3 zeros, rupees in thousands. So after removing this 3 zeros, will remain 5,000. So instead of 50 lakh, we take only 5,000. Second year 60 lakh, remove last 3 zeros, make it 6,000. Third year 80 lakh, remove last 3 zeros, make it 8,000. Like this, if we make, our calculation will get simplified, easily we can calculate. Now, net sales are given, then inventory, trade receivable, other current assets. These are the current assets. Trade payable, outstanding expenses. These are the current liabilities. So we are given current assets, we are given current liabilities. So we can calculate working capital for last 3 years. That's it. So how to calculate the working capital requirements? See carefully here. Pravik Limited estimation of working capital requirement rupees in thousands. That means last 3 zeros I have ignored, omitted. Now, 2018, 2019, 2020. Net sales are given 5,000, 6,000, 8,000 after removing 3 zeros. Then current assets consist of inventory, trade receivable, other current asset. All the figures after removing 3 zeros. Then we got the current assets. Current liability, trade payable, outstanding expenses. Remove last 3 zeros, take the amounts, current liability. So we have current assets, we have current liability. And we know the working capital is the excess of current assets over current liabilities, or simply CA minus CL. So current asset 1150 minus 200 950, 1450 minus 240 1210, 1900 minus 350 1550. So we got the working capital of last 3 years. Now we need the average sales and average working capital. So average sales, how much are the sales? 5,000, 6,000, 8,000. So 5,000, 6,000, 8,000 divided by 3, you will get 6,333.33. This is the average sales of the last 3 years. Then average working capital. The working capital 950 plus 1210 plus 1550 divided by 3, you will get 1,236.67. We got the average working capital, average sales. Now we calculate percentage of working capital over sales. The formula is average working capital by average sales into 100. So 1,236.67 divided by 633.33 into 100. You will get 19.53%. This is the percentage of working capital on sales. That's it. Now we apply for the current year. How much is the forecasted sales of the current year? 1 crore. 1 crore. If you remove 3 zeros from 1 crore, it will become 10,000. It will become 10,000. The forecasted sales of the current year is 10,000 after removing 3 zeros. Working capital requirement is 19.53% of 10,000, 1953. But 1953 is after removing 3 zeros. Now we include 3 zeros. So 1953, 3 zeros. So it will become 19,53,000. This is the estimated working capital requirement. That's it. This is the first problem on working capital. Now, second problem. X wishes to commence a new trading business and gives the following information. The total estimated sales in a year will be 12 lakh. New business is being started and they have estimated how much would be the sales in the first year. So they expect, the business expect 12 lakh rupees as the sales, total sales for the year. Then he expects to fix a sale price for each product which will be 25% in excess of the cost price. So the company has made a policy that selling price will be ascertained by calculating 25% profit on cost. Whatever be the cost, on that cost 25% is the profit the company wants to earn. He expects to turn over his stock 4 times in a year. So stock turnover ratio 4 times. In a year 4 times the stock is converted into sales. The sales and purchases will be evenly spread throughout the year. That means sales will not be up and down. That means increase or decrease. Uniform sales are expected. Example, the 12 lakh rupees is the total sales expected for the whole year. So we calculate monthly sales. So 12 lakh divided by 12, you will get 1 lakh sales every month. Then all sales will be for cash, but he expect 1 month credit for purchases. We expect that we will sell the goods only on cash. But when we purchase the goods, we are getting a credit period of 1 month. So creditors velocity is 1 month. Then calculate his average working capital requirement. Actually, working capital requirement, we need current assets and current liabilities. In this problem, the current asset is only one, that is stock, because stock turnover ratio is given. We don't have receivables because it is given in the problem that business sells goods only for cash. There are no credit sales, so no debtors, no receivables. Then expects that they are going to get a credit from the supplier. So there will be creditors for 1 month. So only one current asset, one current liability. Current asset is the stock, current liability is the creditor. So current asset minus current liability will get working capital. So from the given information, we have to find out how much is the closing stock and how much are the creditors. That's it. Now see carefully. Estimated sales for the year is 12 lakh. It is given sales are evenly spread throughout the year. So 1 lakh rupees per annum. Monthly sales 1 lakh. The profit is 25% on cost. But cost is not given. So we assume let the cost be 100. Suppose the cost is 100. Profit will be 25% on cost. So 25% of 100, you will get 25 rupees. The profit is 25. Sales are nothing but cost plus profit. Cost plus profit is equal to sales. So 100 plus 25, 125 is the sales. We make an equation. If the cost is 100, profit will be 25, sales will be 125. But what is our actual sales for the year? 12 lakh. When sales are 12 lakh, how much would be the profit? So we take 12 lakh divided by 125 into 25. You will get 2,40,000. This is the profit, or simply gross profit. So we are getting a gross profit of 2,40,000. Now cost of goods sold. There is a formula. Cost of goods sold is equal to sales minus gross profit. Remember, all these are the formulas in management accounting, managerial accounting, as well as in ratio analysis. So what is the formula for cost of goods sold? Sales minus gross profit. Sales are 12 lakh. Gross profit is 2,40,000. So 12 lakh minus 2,40,000, cost of goods sold is 9,60,000. Right? Why we are calculating this? Because we need to calculate the stock. Stock we have to find out. Now stock turnover ratio is given in the problem 4 times. In 1 year 4 times we are converting the stock into sales. Stock turnover ratio, the formula is COGS divided by average stock. Cost of goods sold divided by average stock. This is the formula for stock turnover ratio. But in the absence of average stock, because average stock we can calculate when we are given opening stock, closing stock. But it is given that there is no opening stock. It's a new business. We don't have any opening stock. So simply we take closing stock. In place of average stock, we take closing stock. So COGS by closing stock is equal to 4. 4 times given in the problem. COGS just now we have calculated 9,60,000. So 9,60,000 divided by closing stock is equal to 4. Now we make a cross multiplication. 4 into closing stock is equal to 9,60,000. So 4 closing stock 9,60,000. So closing stock is equal to 9,60,000 divided by 4. So closing stock 2,40,000. That's all. By using this stock turnover ratio, we have calculated the closing stock. That is the current asset. Now current liability we have to find out creditors. It is given in the problem. The suppliers will give 1 month credit period. 1 month credit period. So creditors turnover ratio is 1 month. But how many times in a year? 12 times. Number of months in a year, 12. So 12 divided by 1 is 12 times. So creditors turnover ratio is 12 times. The formula for creditors turnover ratio, net credit purchases divided by average creditors. Net credit purchases divided by average creditors is equal to 12. But we don't have purchases. See here. The formula for COGS, cost of goods sold, is equal to opening stock plus purchases minus closing stock. Opening stock plus purchase minus closing stock. So assuming that there are no, assuming that the opening stock and closing stock are same, we can treat COGS as the purchases. And one more thing, this is the current year. This is the first year. Current year is the first year. So whatever COGS is there, the same is the purchases. The cost of goods sold we got 9,60,000. This itself is the purchases, right? So in place of net credit purchase, I am writing 9,60,000. COGS and purchase are one and the same. Divide by creditors. We cannot calculate average creditors because we don't have opening creditors. So closing creditors will take. To cross multiply 12 creditors is equal to 9,60,000. Creditors is equal to 9,60,000 divided by 12. 80,000 is the creditors. That is the current liability. That's all. Now simply CA, current asset is the stock, 2,40,000. And current liability is the creditors, 80,000. And we know working capital formula CA minus CL. Current asset minus current liability, 2,40,000 minus 80,000. 1,60,000 is the working capital. That's all. That's what it is asking in the problem. Calculate the working capital 1,60,000. Note, assuming opening stock, closing stock are equal, so COGS is purchases. Cost of goods sold, purchases are one and the same. In other words, we can say like this also, because it is a new business, we don't have any opening stock, so whatever purchases are made, that itself is the cost of goods sold. So COGS and purchase are one and the same. So in this video I have explained you the first two problems on estimation of working capital requirement. In the next video again few more problems I am going to explain, so watch till the end. If you are satisfied with my lecture, give a like to the video. Share my channel in your friend circle so that more students can watch the video and enhance the knowledge. Subscribe my channel if you have not yet subscribed. And apart from this, I have uploaded so many videos on different subjects for BCom, BBA, MCom, MBA, CA, CMA, etc. You visit the playlist of my channel, see what are the subjects I have uploaded. In that subject, your concerned videos, you can find it there. So make the maximum benefit from these videos. I wish you all the best for your preparations, for your exam, and get confidence on this subject. Inshallah, we will continue the next problem in the next video.